GKFX Prime presents the Market Analysis Webinar.
Hello everybody and welcome to another weekly market outlook. My name is Dima. As always, I've got another weekly analysis video for you here with a few trade ideas. Hope you had a good trading week last week. Should have been an interesting one. We finally had a bunch of moves across the market, which is setting the stage for this week and provides a bit more clarity to the setups that we've got this week. So this should be a good one. If you were having a bit of a wobble, a bit of uncertainty last week, then perhaps this should be clearer for you this week as we see what the moves hold, and perhaps the market has shown its hand from last week. So let's have a look. I'm going to start with the economic calendar, the main news items to look out for, where the volatility might kick in. Right, and let's start with Wednesday. That will be the first day where we've got any major news going on. So that's going to come from New Zealand. We've got retail sales there. That's very late in the day, early in Australasia time, Asia session. And Thursday we've got from the Euro monetary policy accounts that will be significant. We've got the GDP on the dollar, and again from the US we've got the Jackson Hole Symposium day, which is going to perhaps could spring up some unexpected news, some surprises. That's why I put this comment there, because it's a sort of whole day and in fact multi-day symposium meeting. So who knows what's going to happen. Just bear that in mind. It's not a fixed time and not a fixed bit of news to watch out for. So we could have some unexpected moves that could happen. Just to bear that in mind. Not saying that it will, but the probability increases rather than just any random day. And then on Friday, at the end of the week, we've got a speech from the Fed on the dollar, and again the symposium on the second day. I've added here Saturday for you to bear in mind, because if we have news on a weekend, this is something you might notice. You may see gaps on the Monday open in the market, and over the weekend, if anything happens, we may see those gaps and changes in price on the Monday come next week. So if you're holding a position over the weekend, you'll need to really keep that in mind. You may want to reduce your risk, may want to not even place a position just before the weekend on a Friday, or alternatively close your trades before the weekend begins, before the end of Friday. Yeah, just a little risk, point about risk there. So that's what we've got on the calendar for this week, and I have picked out a few possible scenarios on a few charts here. So yeah, let's go through them one by one as usual. Okay, then I'm going to start with the majors. It's usually what we like to do, and most high profile trades. Right, so we've got the pound here, very clear to see. We've got on the pound is a whole series of lower lows and lower highs, clear swings in the market. Market produced this swing earlier, a couple of weeks back, and we've got that massive momentum continuation, increase of bullishness on the dollar, which means bearishness on the currencies. And we've got that clear momentum to the downside. So quite obviously going to look to continue with that and jump on that and make use of that bearishness. So we've got this low here that we're looking to target as the next possible area. And then further down, we've got the whole number of significant number of 1.7, which is just here. And then the more extreme low point, which is here at 1.14. So let's have a look on the daily and the 4-hour and lower time frames. Obviously, we've had a very protracted momentum move down here, so don't want to be selling it here. Want to get a nice better price. So the better price we can look out for is possibly here, a retracement. There's a gap in the market there, and a more obvious gap sitting right here. Now this is much further away, about 120 pips, so might not see that. Going to look out for the possible retracement here. And I'm gonna have a look at what the price action is around here, and if it is confirming to the downside and the continuation of that short, then this will be the next target from here. If not, and it heads higher, then the next level, the next zone to look out for is this here at 1.19, between 1.195 and 1.98198. So that's the high probability situation here. It's always very clear to see this momentum to the downside, isn't it? And before that, we had this very variable sort of ranging movement, and it wasn't clear what was going on until we had this move. So we've got a bit more clarity now. So that's the pound here. Okay, next I'll go to another major, the dollar Swiss. Now, we were looking at bullishness on the dollar. That's what last week closed as. We had that big move. Dollar made its move, and the other currencies made their move. So we've got dollar Swiss here, bullishness on the dollar. So continuation of bullishness on the dollar Swiss. We do have these lower lows and lower highs on the dollar, but now that we have retraced from the last major swing low to the high, got this very deep retracement into the 78 level and bounced off that. So with this big bullish bounce, going to look for that continuation. So yes, we may be in a slight retracement, and we may be in a longer term downtrend because of this sort of lower lows and lower highs pattern. But we are now going bullish, at least in the medium term, on the dollar. So I'm going to look for that continuation as part of that bigger retracement here. So let's have a look what we've got here. So here's the start of that retracement, and here's this sort of channel that's been developed, very clear to see. And if let me just zoom out, and what I can see if I zoom out on the weekly, you can see there's a gap in price right here where the price did not come back to and may want to revisit, because we had a lot of selling here, not much buying. So usually that shows that we've got a bit of possible gap here that the market can and many times does revisit. At the same time, what I can see here is that here, the start of the month, where the market went bullish to begin with, left these highs here, and this will be the high of the month. So a significant point to bear in mind, significant area. And of course, seeing as we had that big bullish move for the last week, as you can see here, right from the beginning, just went all the way up. Gonna continue that, but want to get a nice better price. So where is that better price? Well, I can see a level zone right here, and this will be a nice level to go long from in terms of high probability. So I'll be looking for that to happen, pull back into here, and then continue to that level. And that level, the high of the month, would be 0.965. That might not happen, might get a straight move up, and if that's the case, then the market is train goes away without us. Yeah, we have to let that train leave and not chase it, because that does not end up well. Chasing trains is not a good idea. All right, so that's the dollar Swiss here. That's what I see as high probability, and we'll see if that happens. We're going to monitor the trade there. Okay, and move on to the minor cross pairs. So last week, let's just have a look at last week's candle. Last week's candle ended up bearish. You can clearly see that, as did the previous week, and we left these wicks showing more downside potential in the following days. Let's have a look at the week as a whole last week. Mark this out as a break of this clear structure and a pullback here. You can see I marked that out into the zone. That will be the area to look for a short, and that's what indeed happened. At the beginning of the week, it did not break. It actually made a move higher, and then it was the expected move. So some patience was required here. I don't know if you managed to wait and be patient and look out for that and not rush. Hopefully you did, but if not, perhaps there'll be another opportunity. So this was the trade of last week. So let me just move all of this away from here. So obviously this is now a new high, and as it's breaking lower, I'm going to look for that continuation to the downside. So we've got a nice, very bearish move here. It's really made a very big move of about 140 pips. So I'm not going to be chasing that. I'm going to look for a better price. Now, where would that be? That's the question here, isn't it? So it's a tricky one here because we don't have very clear swings. We do have one swing high here, broke to the downside, and we may see that drop right away in the week and come down to these levels here where we've got a double bottom here. We may create another bottom and come down to revisit that area at 297. So a nice better price would obviously be anywhere up here. That will be a nice deep retracement. However, I'm not sure if that's going to happen. If I look even low on the hourly, we have a possible gap right here in the market. So a retracement here and a some reversal price action to the downside would be nice high probability. And if it fails that, then possibly into this zone, and then even better because it's a nice higher price, a nice more expensive price to short from. We'll have to see how this develops. At the moment, it's a bit of a messy looking chart because we had this small little retracement and then a move lower. It would have been nice to come up into these prices here, but it hasn't done that. So may want to trade a bit more carefully here. The other possibility is a break of this low and then retrace and then a continuation from there. However, the issue here is that we're very close to these lows, so there's not much of a move here. It's like 20. It would work out as, obviously I'm just theorizing here, but it would work out between 20 and 50 pips, which is not much. So yeah, obviously the distance from here to the bottom target here, we've got 120, 130. From this level here, we've got about 100. And the lower down you go, the lower the probabilities are, and the lower the risk reward. So bear that in mind here with the Euro CAD, okay? Right then. Let's go to another pair. So we've got, let's go to CAD yen. So we just had Euro CAD, short in Euro CAD. That is short on the Euro and then bullishness on the CAD. And with that, we've got CAD yen here. So again, keeping that in mind, and really want to stick to a overall bias on the currency, not try to complicate things by mixing them up and short the currency on one pair and then long the currency on another pair. So I'm going to choose that. And in this case, bullishness on the CAD is obviously looking to go long on the CAD yen. That is also coupled with the fact that we've got bearishness on yen overall. As you can see, I think I mentioned it last week as well, yen has been really weak over many weeks. It's a bit of a yen has been weak over many weeks. If English is not your first language, then it might be a bit confusing. Okay, on the monthly, we've got many months of bullishness here. Brief pause here, and we've not had any continuation yet, and last few weeks have been bullish. So looking at this zone, this area, possibly to hold, and these wicks signifying that there is more upside coming with the CAD yen. So that's last week as well, closed bullish. So with that bullish outline, bullish outlook, I'm going to look at what we've got on the chart. So we've got this break of this structure to the high. We may be reaching this level up here and then ultimately the level above. However, I don't know if that's going to be the case. At the moment, we're in this bigger ranging looking movement. So I'm going to tread carefully here. Last week closed very bullish, as you can see, just continued bullishness right from the beginning of the week after it went lower and then moved higher. So what would we need to see in order for the probabilities to turn into our favor to have a better trade? Well, I see the gap in the price action here and a nice retracement to the downside, and then a continuation up to the next level, which is up here. If you look left, that would be a nice probability, and I wouldn't look for the market to break this low. If it breaks this low, then obviously all ideas of the buy scenario are invalidated. Right. There's also the other option, isn't there? There's also the possibility that we'll have a move higher at the start of the week, and then if there's a retracement, possibly again to this zone. Let me just delete that, and now I'll mark it as a zone. Back down into this zone, and then that will be a high probability entry because we've got a better price after moving higher, and then I would look to take out this ultimate high right here, which has been there for a very long time, hasn't it? Since it broke the high of back in 2014, very long way away. Okay, so that is the scenario on CAD yen, and like I said again, the markets are beginning to slow down here over the past few weeks, so I wouldn't expect this to be too much of a bullish move. We'll have to wait for some really good, clear price action and good risk management as always. At the moment, these three candles closing bullish indicates bullishness to continue. Okay, let's carry on with the other charts. Just here mentioning little clues here for you that you might want to consider on the CAD yen. Typically wouldn't expect breaks of major structures, so that is why I am a little bit more careful here because of this break on the weekly time frame. All right, that was CAD yen. Right, what should we move on to next? Let's go to gold. Gold, as we could see from last week we had that push lower, very, very clear push to the downside, as was expected from last week. So as you can see, last week beginning, I was looking for the market to push a bit higher before coming to the downside. However, it didn't do that. It broke lower instead, which confirms and shifts our bias to the downside, which should have done if you were watching this live. We broke very clearly, broke structures in the market, which indicates more downside. Now, since we didn't have that move higher, but we had the bias to go lower, then now I'm going to look for a retracement, possibly back into this zone, maybe a little bit higher, and then the continuation to the downside to take out this low right here. So we've got that confirmation. The nice thing here is we could see that the market is moving to the downside. It is coming down. It's showing us where it intends to go. So that is the bias here based on last week. And maybe you didn't have an entry here. You can see that straight away from last week, the market just collapsed very quickly, moved down, and just did not come back to revisit. It just kept heading lower and lower and lower, creating these hourly structures to the downside. So I want to see a nice, because from here to here we have a very big move over 6,000 ticks. Do want to see a very good retracement before considering the sell. And this should be a good risk to reward trade right here. So patience is required here. Get a good entry, and let's see if I can catch this move. So that's on the weekly. You can see that very clear to see. Drew this channel, lower lows, lower highs, this zone of interest where I was looking for the high probability sell, and that is what has indeed happened. The market reacted off that. So that's the gold setup, high probability once you get a better price. Okay, I'll move on to oil now. Oil is something we've been monitoring for a few weeks if you've been with me. And let's have a look at where we are at now. 2 weeks ago, marked out this zone where we did have that move off, and now it is becoming a little, I should say a bit more, well, I should say less clear. Less clear. So let's delete these lines. Let's delete all of this for a moment. And let's look at where we are at on the weekly. So 2 weeks ago, we had this Harami inside bar looking for a continuation, and it did push lower, but then rejected, and we have now closed higher. So we left this wick, and it is now a little bit uncertain. Why is it uncertain? Because I was looking for the market to reach this level right here, and it did not quite do that, and it pushed higher. However, it did not close that bullish, at least not bullish enough. If you look on the daily, it still created lower lows and lower highs. So it's not quite clear here. It's not quite as high probability as it could be, or as we would really want in order to justify taking a good quality trade. Now, where is the next scenario here? Let's have a think. We've got these structures, we've got these lower lows and lower highs. So if the market breaks this significant high right here, structural point, then I would look for the market to push higher. And if it does indeed push higher, then after a retracement, I would look to the continuation. If that is not the case, if I look on the 4 hour and we break this structure, and in fact go lower, we may even likely break this low right here. If we go lower, a retracement, and then looking for that continuation to the downside into the original zone that I was looking for before, which is here at the 84.5 mark. So this is uncertain. This is not a very high probability setup as it is right now, until we get a really, really firm push one way or the other. And this, the fact that the market is kind of slowing down, it's not creating such big protracted moves as it did before. If you look at this here, major move down and then retracement, another major move and then retracement, and yet again major move. And then you can see here the moves are not as big. There's one here, and then what happened, there was another one here, but we did not break this low very convincingly as we did before, and now we retraced and it's kind of slowing down and it's waning. Perhaps you can see that here. And as well on the daily, if you wanted to draw trend lines, if that's your thing, then you'd really want to see a clear break of that to continue to the upside. So that's where I'm at with oil. I'm gonna really give it some time really to develop. I think that is the wiser choice here. Apply a bit of patience, or a lot of patience, as much as needed. And the whole week, be prepared, because the whole week may go by in this current ranging, waning movement. I won't be surprised if the market just moves sideways the whole week as it slows down. So not favoring this setup at all, to be honest with you. At this point, I'm going to have to wait for either scenario to happen convincingly, with convincing price action to make it worthwhile. Otherwise, yeah, better put your hands under your legs and sit on the sidelines, yeah, under your thighs. Okay, finally, Bitcoin, right. So last week, what were we looking at? Looking at the market to come into one of these zones and then reject. So looking at last week, here was the markup. I was looking for the market to come into this zone and continue much further and possibly higher. However, it just ranged here and then kind of did this very weak ranging bouncing motion without any push to the upside, and in fact it broke lower, collapsed, and now we have this confirmation, we have this clear indication the market wants to go lower. Got this. Here's a break of this structural low, and there's a break of this low, and you can see this massive push down. The market headed lower, so we didn't have that push to the upside into this level, so I'm now going to ignore that, delete all these lines, they're no longer relevant. And you can see I marked out this range here and a push higher, but that push didn't come, so no price action signal to enter. Okay, right. Where do we go from here? Well, if you know me, you probably know the drill by now. Massive push lower. If you look at the whole week, very bearish candle. Looking at the daily and the 4 hour, well, I'm going to wait for a better price because I don't want to be chasing this huge move. So what's the better price? Well, let's delete this and this. What I'm going to do is draw a fib from the clear swing high to the low where it's currently at, although this fib could change, but the 50% is here, so I want it to go beyond the 50. So I'm going to mark this area right here, which I would like the market to revisit. And then once I get some action, some capitulation to the downside, then looking to market to continue, create new swings, something like so. But of course, this is just a kind of projection. This is a kind of a prediction, but there's no point to predict, just going to respond to what the market tells us to do. So at this point in time, looking for that bearishness, retrace, and then continuation to the downside. And I'm looking at the ultimate low here, and that will be a nice, very nice risk to reward trade right here. So a nice looking trade here. This is looking much clearer, definitely clearer than oil, and even clearer than some of the other charts I was looking at earlier. So this is the outlook for the week. These are the charts that we're going to monitor, and as always, manage your risk. As always, pick your trades carefully, pick the higher probability scenarios. You never know what the market is going to do, so manage your risk well and trade according to your tolerance. Don't want to be gambling, want to be managing trades well and being professional. So that's the outlook for this week. Hope you enjoyed this one. Hope it was clear for you and helped you to get a few ideas and also improve your trading. It's about education, about learning why we're looking at the market the way we are and keeping it consistent. Hopefully you've been with me for a while now and a few weeks, and you can see that the scenarios, the concepts are very similar, and can just continue to use them again and again. So have a good trading week. Look out for the news as always, and especially towards Friday, where we've got the symposium and other major news. And yes, if we do have a ranging market, if the market begins to range from here in some of these charts, then you want to apply even more patience and no rush in taking a trade. It's quality over quantity. All right. Thank you for joining me. Hope you have a good trading week. Enjoy it, and bye for now. We'll talk next week. See you on the next market analysis video. All right. Bye-bye for now.